All right, now I gotta make sure YouTube's actually working this time. There it is. We're live. We got the disclaimer up and everything. We're good to go. Welcome back,
Awesome.
guys. Thanks for joining us. I appreciate your support, your likes, your subscribes, and all that stuff. Apologies for Matthew Tuttle had to skip out the last second. He's got something that came up, so we were planning on doing a trio show today with Creed and myself and Matthew, and you know how things kind of change, especially during holidays. It's always kind of nutty. Same with our price action lately. It's been a little bit on unhinged, so to speak. It's a very hard month to trade. We were just kind of talking about that before the show here. That this is the month where things get interesting, but also difficult until you get follow through. So yeah, we're seeing that chop. We're seeing that consolidation, and it's hard to get decent trades out of the market unless you're very keen on scalping chop. Something I love teaching, by the way. So
Yeah. Well, and that's the thing too, with us rolling into the new year here and just out of the new year. By the way, happy new year to everyone out there. That's the thing, Jeremy, is that usually the first 1 to 2 weeks of the market tend to be one of the worst times for a longer term or even a 1 hour trader. Swing trading can be quite difficult as well. Last couple of years, we've actually started the year off on a downturn. It looks like the market's going to do that today as well. We just had that oil report hit 30 minutes ago, and it was relatively neutral, but the market wasn't exactly happy about it. It really makes me wonder what we'll be seeing over the next couple of weeks. Are we getting back into a more typical style of market versus what we've seen in the last couple of years? And honestly, I think we are. It's really going to depend, though, how we see with this new administration stepping through on how the money flow into the market wants to react.
oh, of course, and it's going to be kind of everybody's waiting to see a move, and before long, everybody's waiting for each other to make a move, and then
Mm-hmm.
once things are convincing or you get that range break, that's when the follow through happens, and that's where everybody jumps on board. So, like we've seen this consolidation happening on IWM. We've been trading primarily IWM and RTY and M2K in the live streams in the morning, at least on my streams. And it's very beginner friendly trading with this particular instrument, but it's also got the same kind of things you can expect from SPY and QQQ. You get these choppy ranges that are just very difficult to manage. So swing trading's been kind of hit or miss these past couple weeks, but we've still been able to find some themes that we can run with. It's just a matter of kind of waiting for the not necessarily the dominoes to fall, but for the piece to settle in and start to build a construct of what to expect in the next few weeks. And yeah, it's like Marcini just commented here. Yeah, the sky is falling. SPX back down. Yeah, I mean, you'll get that notion. This does resemble a nice bear flag in IWM, so to speak. I'm pointing at it right now. But look at the daily chart. And, it's just been in a long trend. It's got some key support zones. Yeah, of course. Yes, we can be bearish as hell. We can run down to 204.50 pretty easily with this guy. Um, you know, Everyone else also looks at like things like moving averages and such. Well, the 200 is kind of in the mean of that move right there, around 213 for IWM particularly. Can we expect some outcome from this? Yes, eventually all ranges break. We always preach about trade the break, don't get beat up in the setup, and at the same time, in the same breath, I can say, learn how to scalp the setup because it'll really help you when the break happens, and you'll get a better chance of making a profitable trade out of the outcome once it does break. So, and I was trying to kind of paraphrase stuff like learn the complex stuff, get that all out of the way, and then eventually you dumb it down and simplify it. And that's
Well,
that's kind of the
you know,
charts we look for.
I'll wait in on that. I think back to a book called "The Richest Man in Babylon." On there, really good book overall. And if you follow the principles on that and you put that into your trading, you learn how to spread it. You take this complex thing and you spread it out and you start eating it piece by piece by piece. I mean, we all hear the term "eat an elephant one bite at a time." I don't know who's eating elephants. I don't know where that one came from, but let's say a big steak on this. And you take this very complex thing and you wedge it down to where you explain it in its most simple aspect so that you can engage with it. Having an understanding about the market and engaging with the market are two completely different things. And I feel that's where a lot of people tend to fail in markets like this, is that they understand this is the buy side, this is the sell side, this is a bid and an ask. They understand that, but how do you understand the participants and why those emotions are shifting within the market? This is where our risk scenarios come in, because you know you have that psychology of the market, especially now. It doesn't matter if it's the Russell, the Dow, anything in there is okay. These participants of the market, of this market mechanism, are behaving in this manner due to X, Y, Z, and they're placing their funds, be they risk funds, non-risk funds, in that manner as well. So I think that's something a lot of people fail to do, is bite that steak one bit at a time, but make sure you chew as well. That way you understand it properly on
Right.
there. That way you can engage with it. If you can't engage with it, I don't care how many freaking books you read. The old saying is, I would rather have a man that's done 100 deals versus read 100 books.
Right.
So that's the thing, is you get that experience, get those lashings.
We used to joke around a bit, but it would always make sense where, like, you go back to the karate movies, and you say, never be afraid of the man who practices 1,000 kicks. Be afraid of the man who practices one kick 1,000 times.
Yep.
The market's
Yep.
kind of like that. It doesn't necessarily, beat for beat repeat, but it does rhyme. And that's where I'm getting into, like, I just pulled up the 2 hour chart here just for reference here. Whenever you want to see what rhyming looks like, just look at liquidity zones. I map them out. I just grabbed the nearest big wick on the 2 hour candles and plotted as a zone. And here we are. We went damn near A to B in that zone, rejected here, back to the bottom. Here we go. So, when you get those rhymes, that makes your life easier. You dumb it down. You have all these indicators, all this other stuff you can look at, but what's the price action tell you? It's just basic, hunter-gatherer skills here. You eventually you start to see stuff that makes sense to you, and patterns, and they start to make sense, and you can repeat those, you can anticipate those. So, if they're
Jeremy, I think you touched on something really strong about that as well, that people fail to understand, is that even with our systems, you work on a much smaller time frame than I do on there, and I like the 5, the 15, the hourly. You've got the 5 second, the 15 second, the 1 second, and but the thing is that as people learn and work with this, it's how they are able to receive, perceive, and act upon the information on there. So, ladies and gents, you may see an indicator on our side, be it a Bollinger Band, be it an EMA, be it a Swami thermal chart on there. For some people, if you've never seen a Swami, go look at that one. That's a very different one. And then, the Gatian Rainbow as well on there. It's how you as an individual can properly understand what's coming through. It doesn't matter what's on our chart. It's because we're all looking at the same data, unless you're on the professional side, then you got more data, but you're looking at the same data into that. And then how do you perceive that data to then act upon it? The price action is the most pure form of that data, but depending on your broker, you actually may not have pure price. I recommend, a little bit of side homework there. Go look up into what's called aggregated data for your brokers or your platforms, and this is where they group it. So you may think that there is, 50 people at 222.10, but in actuality, it's a spread, and they're at 222.8, 222.12. And, so they're grouped together because they're aggregated, and then that affects you because you're now receiving bad soup. That is something to always keep in mind. Little pop out coming here.
Yep, I was looking at it. And a while back, I compared kind of another thing where, like, you get the human brain, for instance. We've got teraflops of data storage available, but the processing speed, the RAM, it's only equivalent to, like, what, 4-bit, 5-bit for average people, 8 bits for geniuses, something like that. It's insane. And there's only so much data you can crunch with that limited supply of RAM. Yes, your processor speed's pretty quick, but you got too many data streams going, you eventually run out of RAM, and you can't track all that at the same time, so to speak. So you got to be able to react quickly. So where I'm at on the 5 second charts and stuff like that, I can plot those all day long. It's easy. It's just trade from point to point, rinse, repeat. But I'm not ignoring the long term pieces, and I'm taking advantage of some of the longer term price action. And that's why I even bother looking at stuff like, okay, well, where's the 2 hour? Where's the liquidity zone? Okay, I know we're at that zone. I can trade targets within that zone on any time frame, and not just the 5 second. I can trade on a 1 minute to 10, whatever. Doesn't matter. The idea is I'm condensing information down as far down as I can, just keeping it into a point of a wedge where I can react to it and actually utilize it. So now lay that into, I look for the most simple charts when it comes to swing trades. And when I've had enough experience being a hunter-gatherer in that respect, watching these reactions and watching all these things moving in the market, eventually you get this ability to focus in on what's the simple and easiest prey to catch, right? So when I'm looking at simple charts and we're maintaining a 94.6% accuracy rating on our callouts because we focus on those easy charts, that makes sense. So if you dumb it down for yourself and then you learn to focus on just the easy stuff, things they become easy.
Well, and that's the thing. We were talking earlier about Valero Energy coming through, that symbol
Yes.
VLO. And looking at the chart there, something that you can combine as a newer trader into your markets is actually working with your portfolio and actually separating that portfolio. So you have your baskets to work with. Like for myself on this with VLO, it's energy sector. We've seen energy sector moving. Looking at this chart right there on the daily, I look at it and go, all right, well, we did set in a bottom. One or two things are going to happen. We're either going to regress back down and create a double bottom, or we're going to relocate up to that 130, 140 region. And that allows me to run two different types of option strategies on this. In particular with VLO right now, we do have that bullish momentum up. And as long as we could continue that momentum with strength, I think it would be advantageous to either sell a vertical set on that with something around the notion of maybe doing a 120, 115, 110 and selling the put fly on that. And remember, whatever we're selling, we want price to go away from. But let's say you're not the seller side of this. You go, no. I want to be on the buy side of this. I think the market's going to head up. I want to follow that side. Great. Same thing. Either a butterfly or, and this is something that throws a lot of people off, you have a capture iron condor on this. Now, a lot of people, when they enter an iron condor, the price is already at center. There's actually a way that you can work that iron condor, and as long as you get the numbers just right on that, you can actually set up an iron condor that has a more positive alpha for you. That price works its way into your iron condor range. And you can only do it on a couple very specific assets with that, some scenarios. But yeah, it allows you to capture. Otherwise, just run a butterfly on it as well. Again, I'm a big fan of butterflies. Everyone in the community knows that. I love capture butterflies. But like for a VLO on here, looking at the seasonality on this, we see that typically over the next 30 to 45 days, VLO historically has made a move northward on this. Now, granted, the type of the market we're in right now, I would not be surprised if we get a bit of sideways action and even a little bit of a pull down since it's tagging that EMA there. But the overall 4-week, 6-week trend on this, if it is north, I do not see a 130 by 135 if you're on the shorter side, or a 130 by 140 butterfly, and then put your insurance where you need to. Now, we've got that nice 145 EMA here that is showing a statistical resistance there. For me, I look at the high tops on this, and I see 142, 145, and it looks like 150 as well. So if you wanted a balanced butterfly on that, you'd buy the 130, you'd sell the 140, you'd buy the 150, and that would be a balanced fly. But if you're feeling a little bit more protective about things, then you do a 130, 140, 145. You got that insurance a little bit closer to you. And it depends on your duration as well. Always see, all right, well, what if I do a 2 week? What if I do a 4 week? What if I do a 6 week? And work those numbers to see your premium. Sometimes adding time to the position isn't actually in your benefit, even though you are receiving that theta on the top side. There's something to keep in mind.
Right. And I was just kind of drawing it out on ranges here for liquidity zones. It kind of plays right into it. The other thing is there's two other ways to go about this. So you can go, and one of my go-tos is like to convert a debit spread into a butterfly later by selling a credit spread against it. So like you let the momentum work into a profit range on your debit spread and then sell a credit spread against it. Another one is, and this is one Matthew likes to do, he'll go and whether it's with a put fly or a credit spread on the put side, expecting bullish momentum, he'll use the credit from that to pay for the risk on the long position, going into debit spreads and stuff, which is very smart as well. And if it lies in with the heat strategy, it's you're risking a small loss, but if you're right, you make a lot. And if you're wrong, you only lose a little. So it's an ideal situation being able to adapt option strategies, whether they're complex or simple. They kind of do the same thing, and then all you got to do is pay attention to, okay, well, where's the simplest chart I can find to use that strategy? And VLO is a pretty easy one. I mean, it's a nice reversion target right there at 130. If it picks up some momentum and gets above that, 140, 145 is a pretty nice range to trade to. So it's got the setup for it. I do like having a short-term target. I'm a short-term kind of swing trader, but 130 looks really nice for a reversion trade. Once we get through this LZ, I think it's got a pretty good chance of hitting it. As long as we don't reject here and make a double bottom, we're in good shape. Other energy stocks we were talking about last week, we can kind of revisit a couple of them. We were looking at AR and EQT, and those are just moving through beautifully. I mean, we plotted those out pretty nice. Particularly AR just nailed that target. We were talking about this on Tuesday. Yeah, we're that good. And then we get into EQT, same situation. We closed just above the pivot line, and we shot up for another quarter move and hit a target on that as well. We're just waiting for consolidation and follow through. So we get into looking at the simple charts. We overlay the either simple or complex strategies, and it's not ever about what you trade. It's always about how you trade it. You remain fairly accurate and profitable over time. So that's the whole point is, yes, you can take that information, condense it down, and stupefy it, and it works better. But yeah, we've got a few themes kind of starting to shape up in the first week of January here, and we're kind of touching on some volatility that's kind of expected in the first couple weeks. Can we see some follow through into some longer term stuff? I think we need to keep our eyes open for opportunities here, but for now, it's we should be more or less sitting on our hands for a little while before we become long terms. And then,
well, and I agree with you, man, on there is, and I cannot stress this enough on there is that, guys and gals, the first 2 weeks of the year are heck. They really, really are when you're working through things. And I cannot say that enough. Be very careful. But also, if you are trading and scalping, this is the time you do not want your stops to be too close. You want them to be respected. Don't get me wrong. You want your stops in place. But because of the wicking that we see, you guys in the community hear me call it probing all the time as well. We see these little snaps into these areas. That's what they do. They grab. That's exactly what they're designed to do on there. And nobody cares about your little 5 lot or 10 lot on there, but you get a bunch of people at those common areas. Guess what? That's a lot of liquidity moving in and out of the markets. That's something just be abreast of. I mean, right now on EQT, it's a beautiful move off of that nice little breakout there. Now we've had that base. I agree with you. 4802, not a bad place at all. But if we were to measure that out, what is 60% of that that handle breakout there, we're going to be up into that 52 and 53 region. And those are all within respective real world viable regions. But the thing you have to ask yourself is how much time is it going to
Right.
take to get to that area? And, I think that's where a great aspect of Jeremy's wheel strategy comes into is you're able to work that time with you. But also if you're running butterflies or calendars, on that, then you can work that theta with you. Right now, January is a theta beneficial time as a trader. So if you've been looking to get into options, now is the perfect real world environment to start to work with anything that really requires theta to be beneficial.
Yeah, Tuesday I was talking about selling some 37 strike. I think January 12th expiration, if I'm not mistaken. I can never memorize all those expirations, but I was looking for selling them over $1, and ordered it and fill. I'm okay with that, but TNA is one of my go-to. It is my go-to. Like you could literally run a fund on TNA, selling options on it, and it's got some downside risk to it, and you kind of got to look at the daily chart and assess. We're right on that 200 period, and everybody knows where that is, and it's like, well, if we break it, we've got this huge measure move that can take it down. I mean, $33 is pretty much the downside risk that we have on the short term for this one.
Mm-hmm.
But in January, and we've got the I sometimes call these a doji target. It's just consolidation. You got this indecision all over the place here, and it's either going to break out, give a reversion trade to like $50, or break down and give a bear trade. But overall, this entire time I've been trading it since March. I mean, it's paid for itself. I for the time I had no position on it, before this drop here, my cost basis was negative $1.36 a share. So even though I got assigned on some 48 puts not too long ago here, my cost basis is still like $22. I could care, let it go. But it's a matter of I can make premium in the meantime. And in January, you get a ton of accelerated theta, and you get some implied volatility swings, so you can get those 2 or 3 strikes out of the money. Dollar bills on this thing, and it just chips away at your cost basis that much faster. So, it's a great time to be looking to sell options on TNA.
I like it. And all right, so speaking of cost basis and speaking of chipping away, I'm going to talk about the what can I say? The most explosive stock out there right now, TSLA. And the reason I mentioned that, I just see here across my news wire coming through, FBI official suspect stated he had joined ISIS before the summer. So, I mean, they said that was probably the worst vehicle ever to be utilized in that manner because of it, like, containing everything.
Yeah.
On there, we can see, though, for production numbers, it came through as well that, they're expecting production numbers to be down here with Tesla slightly, which, okay, modest negative, or I'm sorry, not production, on delivery numbers.
Yeah.
And, so, a little drop overall. But as far as the company itself, when we look at this at a technical analysis perspective, look at that run up that it's had. It's had a heck of a run up. So, yeah, a slight adjustment of price, not really that outlandish. I'm a big buyer at 365, where we see that prior November ceiling.
Right.
Right there, now acting as support on that. Look, we had the breakout, we had the adjustment, then we had the world being the world. Now it's dipping itself down to that 365, and that region, 365 by 370. I'm a buyer in that area for me. I think it's a smooth play. I do not see Tesla going anywhere. Yes, they got to adjust some numbers. Yes, people got to be able to buy and do some things. But remember, Tesla isn't powered by government subsidies like a lot of your other manufacturers. We've seen through the news. What was it? Nissan, Kia, the three. There were 3 of them that were getting together to now form a larger conglomerate. They're basically becoming Stellantis, but Stellantis Asia on there. And, so it seems a lot of the auto manufacturers are are working, how should I say, a lot like Tata, a lot like Stellantis, Tata, and I forget the other one off the
The
top.
Tuck
Uh,
Tuck. What was it? Other?
that's
Uh,
the one I can't remember it off the
yeah,
top of my head.
I
The
know which
other
one you're talking about.
conglomerate. Yeah, but so I mean, what Chrysler Group used to be on there. And what we're getting at is that this is not unusual, but for Tesla, they're a standout. There is no EV, electric primary vehicle sources. Most of the
Right.
auto industry is powered by subsidies on there. And if you were to actually have the real cost of those vehicles coming through and pass the consumer, you think a Jeep Grand Cherokee is expensive now. After the
Yeah.
imports and everything else, I am not exaggerating. Your little Hyundai Sonata would be a $65,000-$80,000 vehicle
Yep.
on there if there weren't for the subsidies. Now, there are some brakes, there are some other things that really help with it, but Tesla's the only one that, well, not the only one, but that space there, not powered by subsidies, and that's what I think really gives them the edge. I mean, I know everyone called me crazy before, many years ago when I was getting in Tesla, in the low twos on that way back, and then they did the split, then they did the run up, yada yada yada,
Right.
and I'm not going to be surprised if we see something similar again with them.
One of the things on Tuesday, I gave everybody a little homework. I said to go and check out another YouTube channel called Connecting the Dots, and their latest video on there just kind of shows a lot about how the major domestic automotive producers have pretty much entered the final stages of digging their own graves. But one of the things you mentioned there was like Tesla kind of stands out, and there's a major reason is that Tesla is resilient because they don't focus on using so many off-the-shelf parts. So, like when you start to put pressure, if you're a competitor and you're a large competitor in the automotive space, how do you put pressure on your up and coming competitors? You hit them in the supply chain. So,
Mhm.
if they're using a lot of off-the-shelf parts to assemble their vehicles, and you hit them there, they're kind of screwed. They're at the mercy of supply. So, you look at the big chip crunch. While everybody else was literally delaying production, and you had people who were purchasing vehicles waiting 6 or 8 months for delivery after purchase through the chip shortage. Kid you not, GM particularly. Meanwhile, Tesla's like, I'm going to work around this. Let's just make most of our stuff in house, or we'll find other sources. And that's exactly what they did. They were able to keep ahead of that and make deliveries on it. That's why back when the chip shortage was really at hand, Tesla kicked butt, and everyone else kind of took a quadunk. So you get into this situation, and you realize that, well, eventually that has a repercussion. And here we have, delivery numbers were a little short, which means they're going to be a little bit oversupplied on the inventory side. Is this another setup like it was a few years ago when I made that killer Q4 trade that paid my bills and then some? It's kind of seeming like that, where maybe Q4 numbers will show lower deliveries, but towards the actual supply demand side, produce a setup for maybe a Q1 move instead of a Q4 move in this
Yeah.
situation.
And speaking of that, we just had it come across here. I'm a little perturbed on this language, but U.S. President Biden is preparing to issue a decree permanently banning new offshore oil and gas development in some of the U.S. coastal waters.
Jeez.
That could be a very, very big development on there, depending on which regions. Is it in the Gulf? Is it Atlantic, Pacific? Um, what type of development? I mean, it's just being broad and saying new offshore oil and gas. Maybe it's specifically for that. I have not seen the paperwork on that, but that would bring up, USO, the U.S. Oil Fund. There would be a trade CL, but also any of your auto manufacturers on top of that would be affected, and it could be a boost for the EV industry as well. But a lot of people don't understand is oil is still used. Everyone just thinks of the fuel, but there is a lot of oil and logistical gas utilized to create the EV vehicle because we're still in that curve of adoption.
Right.
So
Not only that, you
something
got to
to at least
lubricate
be
it.
abreast of. Yeah, yeah. You got. I mean, look at wind turbines. You know the amount of oil
Oh
that goes
gosh.
into the grease and the winterizing
Yeah.
of those turbines. It's definitely big.
It's by the gallon. I'm looking at Tesla now, and I got a few short-term price targets. We've reverted half of our measured move block here. 360 is a reasonable buy zone for me too. If worst case scenario, if it gets slammed through there, say they hit some more headwinds, whatever, 338 to 340 is pretty reasonable for a support zone on there. But if we're setting up things to where we're bearish in the first couple 3 weeks of January, and all of a sudden we hit the floor and bounce, that could set us up for a killer Q1 entry. So yeah, I'm gonna keep my eyes peeled for that. I missed the boat getting in on this leg of this thing. I couldn't find a reasonable spread that was worth YOLOing into because I love doing those way out of the money spreads. But I might get a second chance going into Q1 here, so I'm looking forward to it. A couple of those we wanted to look at, and just to touch back on energy thing. Talon Energy up 5.5% today almost. That's walking right through our pivot lines and presented a really nice reversion trade and bounce here. I have an outside target on that thing that wasn't quite met on the 2-for-1 measured move build here, but 233.70 is still where I'm looking for this to go once it breaks above the half mark here at 212. It's well underway. And you get things like restrictions in energy production. It just makes the demand kind of stay there while the supply comes down a little bit. Prices go up. It's just common sense. But yeah, this thing's looking bullish as hell again, even though it's been parabolic on the weekly for ever. Talon's a good one. Another one I was kind of looking back at, and this is where we get into the next theme of things is we're looking for natural gas supplying energy for the whole AI boost, and now we've got quantum computing coming into focus here. QUBT was something we mapped out, and again, parabolic trend, just diabolical parabolic, but now we're looking for a support drop down for a reversion and bounce, same setup as the energy involved. So QUBT here is showing up on everybody's radar today. I built the wedge and built what I call the trap detector. It's right here. We saw the liquidity grab right here. They sold it off, grabbed it back down here at the base. Now we're picking back up. Break half that range, we got a pretty good shot of resuming this trend and at least getting to a $21, $22 target on the angular here in the short term. Long term, I can't really plot this one for a massive length of time, because if you look at the monthly here, those things are psychotically wicky. That's a big range.
Yep.
This is hope and dreams do not pay the bills, guys. You cannot forget to pay yourself when you're riding a trend like this. And this is one of those times where, yes, you see everybody doing that already in this. Now we get the rebound wave, so to speak, after everybody's capitalized on this thing. If it can't hold here, this thing will do market structure. It'll just capitalize down to like $2 or $3 and float forever, and then eventually we'll see market structure play out. But for now, we'll play the volatility. And this is set up to be considerably volatile going forward for the short term, definitely. So the old buy the rumor, sell the news thing, yeah, quantum computing is just in the rumor phase.
Yeah, well, and that'd be the thing too, is that there are a lot of big money investors into Quantum Computing Inc. on there because it's considered the next horizon thing, but also something that came across my desk that was interesting was spatial miners as well. I've talked about this for many years ago. I did some seed investment into that, but now, with SpaceX essentially reducing the cost and actually adding the real world capability to be able to get equipment into space to do this, we at a reasonable price, we may see more companies getting into this. The ethical question on this is that as we are mining the space junk, one a lot of people don't know there's a lot of space junk up there that burns up when it comes through. But if you were able to capture and clean up the space junk, but also mine and capture any incoming asteroids, the amount of iron, nickel, chromium, things of that nature, that, and not to account for the golds and silvers,
Right.
we would definitely see a shock on the cost of these things, because yes, you do have the inherent cost of getting to it, but there's only so much tonnage of gold and silver and palladium in the world. Well, if you now have a completely new open horizon of mining that's capable to this, I hate to
Right.
say it, but we're not going to see gold go up. You're going to see gold and silver go down, and I mean
Considerably.
down, because you have more supply on this. And no, it's not going to happen in the next year.
No, it's
Hell,
going to
I
be
honestly don't even think it happen in the
decades.
next 3 to 5 years. Yeah, it's going to
Yeah.
be like a decade or so. But it's one of those things to be very, very, very uh, conscious
There,
about.
there's
You know?
the old tech is or the old I guess the old rules haven't changed. So like you run into the rocket problem, for every pound of material you put in orbit, you need a pound of fuel. Well, fuel weighs a pound of fuel too. So to put 2 pounds into orbit, you need exponentially more fuel. And that exponent gets pretty high when you're launching 1,000-pound plus payloads. And you wonder why the rocket motor's fuel storage is so massive compared to the size of the payload. That's why. It's just an exponential growth. Putting it up there is one thing, but I mean, if you could figure out how to recycle it while in orbit, you've got some. All this trash floating around the globe here, you can just condense it all, build new stuff, and go out to use that as equipment to mine rockets and whatnot, or mine asteroids and whatnot, and bring it back here.
Well, yeah, and that would be spatial manufacturing at that point. And,
Right.
on the manufacturing side, that brings it, a non out of the realm thing that we currently have right now that is, much more beneficial to look into. And it's actually in the auto industry as well, is additive manufacturing on
Right.
this. For those unaware, 99.9% of the manufacturing that's occurred over the last really, 5,000 years on this has always been subtractive manufacturing. You whittle something down to then create something else. Additive manufacturing is to where they take things such as a titanium powder, things of that nature, and it's essentially melted through a 3D process to be able to be created into a new thing. Additive manufacturing has allowed us to create new rocket engines, to create new shapes, to create new designs that previously we couldn't, because even with a 5-axis mill, you couldn't create the shape. You're not going to
Right.
create a mycelium structure shape. We could barely even create bird wings at that point. Now you can do it with additive manufacturing. So companies like Metal Forge, oh god, I'm trying to remember the other one off the top of my head. I'll post them into the community group later. But companies that are exploring and working with additive manufacturing are going to take off, because why have subtractive manufacturing on there when you can have additive manufacturing and you get much more complex designs at a much more efficient rate
Right.
as well. So it's the next step essentially of injection molding, but injection molding as well to make the mold was a subtractive manufacturing process. Now we can make more complex molds,
Right.
or just make the whole daggum thing without a mold. So,
Right. 3D printing.
mhm.
I mean, that's going to be kind of. I think that 3D printing is still in its infancy, even though we're currently able to 3D print titanium stuff, which is pretty impressive. But you get into what the actual outcome is in the long term is you can manufacture anything you want anywhere you want, and the outer space manufacturing or in orbit manufacturing is a considerable idea.
Yeah, I mean, I know it sounds very odd, but remember back in the day, it was freaking Matlock that had a phone in his shoe, and now everybody has that. I mean, we all remember when teachers said, "Oh, you won't have a calculator in your pocket." I got more, operating power here than a lot of spaceships
Right.
on there. So, to say that it will never happen is a bit short-sighted. It may take some time, may take some developments, but quite frankly, daggum, as long as it currently works with our laws of physics, anything's possible. So that's always something to keep in mind.
That's it. And in the meantime, I mean, we've got, setups on a lot of the things that are going to build that. Like I was looking at IONQ here, for instance, and that's a perfect setup too. We were looking at the liquidity zone. It bounced through it this morning, but here we go. Buyers falling in, reversion trade to $43, $44, set up, ready to go. And you're going to see this kind of reverberate for a while. It's going to condense for a while. So I was just chatting in the chat here on the YouTube feed, saying, indeed, just scalp the volatility in the short term until this plays out. And that's essentially what we're doing. We're looking to sell a lot of premium, and we're going to scalp a lot of futures. Can we see things in the long term making into swing trades? Well, yes, we can, but there's going to be some things that need to happen first, and that's why we're kind of looking short-sighted on a lot of this stuff until we can find what the best themes are for the long term. We can speculate things that'll benefit from a Trump presidency and rolling out of things that were prominent in the Biden administration and rolling into a Trump administration. It's not going to be easy in the first few weeks. It's going to have to take some time to unfold. So you start looking into other things that are always going to be needed. So like, what are the commodities that must keep flowing in the current situation? And well, energy is a high high focus right now, not just the energy, but all the little peripherals and additives that go into making it usable. Gasoline isn't just gasoline. It's got a bunch of stuff added to it. There's different detergents and all that stuff in there. All of it is part of it. And it's all consumable. And then there's other factors like you get ethanol additive. That takes a hell of a lot of subsidies to do. What happens later? I briefed about this about a month and a half ago, where like if you look at what they're doing in South America, where they're not using corn to produce ethanol, they're using sugar cane, and that's smart because the density in it is huge. It doesn't consume as much water, and there's a lot of benefits to that. And it's a byproduct of producing sugar. Damn it, that makes sense, right? So
Well, that's something I laugh at too. Is that so? For those unaware, I'm actually down in Panama right now, so I can definitely speak on this side of. They do not have 88 octane or 85 octane here. Your lowest grade is 91 here, so you get two options. You get 91 or 93. That's it. That's your only option on there. So I found that very unique, because they're using a higher octane fuel, so they're getting more necessarily pay at pump performance with there. But the way that the fuels come through here and the way that they're stabilized is a bit different. They do have to worry about a bit more water and humidity here on there, so they do have more drying agents than we see in some of the other areas. But adding in that ethanol, those detergents on top of it, the blend are so much different. So that is something to stay conscious about, is regionally what makes sense overall. But we've had pretty much the same fuel since the 90s on this. I think it's about time we as long as the methodology allows for it, I think it's about time we had some type of an update on there, because it's not just about the update of the fuels, it's the infrastructure to do that update. Because a lot of people don't even understand is that until we had vulcanization, just the O-rings on a pump would eat out in 3 months, 4 months on there because of the ethanol and unleaded fuels. So that's something to always keep in mind, is what is the regional aspect.
Right. I swear, I start talking about IONQ, here it goes popping. I love it. But yeah, it's and then we were kicking around the other parts of this idea. I mean, you've got a pretty good chance of RFK fighting the diet supplements and all that stuff yeah, we get that, but then removing high fructose corn syrup from soft drinks and other foods in the
Mhm.
U.S. Well, that goes back to sugar, and I can kind of see that there's a two-edged sword here, and it's a good one because it can help more efficiently produce ethanol to supplement into gasoline, and also, well, you're going to have to have a huge supply of sugar to replace high fructose corn syrup. And we can only grow so much sugar cane here in the U.S., but down in South America, it's easy. It grows really nice.
So something that a lot of people forget about is they focus on the sugar and all of that. May want to look into Cargill on this. Cargill and other companies that deal with salt
Ah, yes.
on this. So the salt trade has been a very, very large trade for a very long time. But, a lot of people forget that that is something that it's kind of a, how should I say, a hidden product in everything.
Right.
And it's part of the cholesterol systems. And working with that salt's needed in a lot of stuff. A lot of people think that salt's just utilized in a foods aspect. It's actually not.
Ah,
You
yes.
have everything from road salt, which is using actual sodium salt, not the imitation stuff. Utilizing that on roadways. Yes, it did cause rusting issues. Yes, they do have some other stuff now, but it's still utilized globally. So working with companies in the salt trade, depending on what RFK does, it really makes me wonder, how we'll see those companies affected.
Right. And then, there's other processes too. I mean, you need alkalinity to help refine sugars and all that stuff. Yeah, it's going to be some interesting stuff in the long term on a lot of this. And the idea is look for the look for the stuff that's been beat up through the Biden administration that has a
Mhm.
chance to have a nice you know reversion trade come out of a Trump administration, and going into things like thinking outside of everything, going into commodities and realizing that, yeah, a lot of this stuff is going to make sense. And all you gotta do is flip through a few charts in those sectors, you'll find some neat stuff to swing. And that's what we're going to be focusing on in the coming weeks on the show here is looking into what commodities are going to make the most sense for reversion trades coming into this. Um, One of them we briefed on, and we kind of took it on both sides going into a Trump administration, was coal. So we looked at BTU, and short term, we had that nice bounce. We've been kind of bouncing right off this zone here. Let me get the daily up. And historically, you had kind of something to pay attention to here. Let me go back into this, and let me see here. 16. So early part of Trump administration one was bullish as hell on coal. Everything was like, okay, well, buy that rumor. Here it goes. He was very in support of coal. Well, it got beat down, and then ended up being that the demand didn't change in spite of everybody and their mother going to getting off of coal. Well, the prices went up a bit. So you get into, I got into some swing trades here, I got into some swing trades here. It was great. Now we're looking at an opportunity where we're just on the end of a massive consolidation. If you look at the weekly chart, it's a big ass bull flag, y'all. Can we find that this will swing into an even higher high coming out of this going into the Trump administration? Because you need energy. You've got quantum computing, you've got AI, you've got all kinds of stupendous amounts of increased demand on energy coming into this new year. And everybody went on the nuclear theme, and we did too. We killed it. But now it was a buy the rumor, sell the news thing, because nuclear stuff takes about 10 years to put together and get running. Whereas natural gas, coal stuff, you literally dig out of the ground and ship, distribute. That's easy. You just turn the valve, so to speak, and let it flow. And coal and natural gas are going to fill that void until the nuclear infrastructure is completed. So, we've been kind of in and out of that, but there is some downside risk to BTU here, particularly. But for now, it's looking like it's going to fill a lot of that void until nuclear technology and infrastructure is put in place. The monkey in the room that's kind of distracting that is yes, you've got the cold fusion things happening. I mean, they were able to make it run for what 47 seconds or something like that,
Mhm.
and eventually, you get a sustainable reaction. That's huge, but it's going to take time to build the infrastructure to put that to use.
Oh, and that's the thing. A lot of people go, "Oh, as soon as we have this, cold fusion, as soon as we have this type of an energy source, bam, it'll be put in that Tuesday." Like,
Nope.
nah, like the amount of capacity, and that's another thing, is amount of capacity of energy to be shoved through. Like, a lot of people think
Right.
you could just shove as many electrons through a power line as you want. And the fact of the matter is, you
No.
can't. On there is a capacity to the light. Don't ask Pacific Gas and Energy
Hmm.
on there. There
Yeah.
is a capacity that our systems can take. We can't
Right.
reformat and just shove, freaking terawatts of energy through the normal transmission lines. And the amount of physical time to replace those lines it's extraordinary. Look at AMT, American Tower, on this, and other companies similar to that. Um, Building the transmission towers, building the power towers, putting all this through Eagle Construction. These are the ones that they have to get the contract to do it. Then you have to get the skilled labor to do it. And, it's a nice idea to have in the magazine, but
Right.
it's not a reality. If you wanted to completely reformat the US power grid on there, you're looking at least a decade. Like even at Elon Musk speed, you're looking
Right.
at 6 to 7 years on there to redo things. And that's what are going to be the new developments within that 6 to 7 years. Because I mean, look how long it took us to go from 2-prong to 3-prong plugins in houses. For those unaware that have never seen it, most of the houses in the US during the first electrical systems, up until about the 50s, 60s on there, only 2 prongs. There was no safety prong. We still have houses with 2-prong from 50 years ago on that
Right.
people work with. So that's why you still have adapters for it. So, it's not like if we can't get a freaking 3-prong adaptation in 40 years, you think we're going to reformat the entire power grid? No, not going to happen. So it'd have to be throttled on there. And it almost completely defeats the purpose of having it, and I don't
Right.
know. It's a chicken and egg scenario.
It is, and it's just something where it's just a matter of time before you learn everything you can learn about a system, and then technology advances. It changes almost as fast as you could take in the knowledge to understand it. you know, um, and I was hitting on that earlier. So as I was looking in a brief back into the PCG chart here for PG&E. I know people personally in 2018 who made life-changing money shorting PG&E. They put every dime they could in out of the money options and absolutely cleaned house. Like these people went from your everyday 9 to 5 job types to now they're retired with over 20 million in the bank still. So you get into this situation where infrastructure has to be adapted to come back into swing here. And just recently there was some announcements of some subsidies being put into PG&E to help develop that grid, at least in California and the Pacific Northwest there to rebuild that. But it's going to take time. It's not just an instant thing. You're not going to see that equity hit the investors just yet. But eventually there will be a reversion trade in here. I'm sure it'll probably pick back up to like $34, $35 a share. From here, it's going to take a little while. But what I would look at is another theme that kind of isn't getting as much attention as it should, in my opinion, is energy storage. So you can run a grid at peak amperage, for as long as you want. And what kills it is you get surges like everybody's air conditioners come on in the summertime, or electric heat in the wintertime or what have you, and it gets those seasonal swings. Well, in between those swings, you can store a lot of power and just keep it producing at peak. Eventually, it will have to be replaced. That's a possibility of something that can fill the gap in the short term and the medium term is energy storage. So I look at things like, what was the one I was thinking of? We talked about it last week too, darn it. It was an energy storage, a home energy storage company. Dang. Oh, I'll find it again. But long story short, it was just they produced battery banks and stuff like that. Tesla's been going into it, yes. RCD, thanks for that. And that's one thing to look at. I almost think that could be a complete subsidiary business from Tesla there, by the way. But there is another couple of companies that are producing power storage solutions, and you start looking at those, and you realize, yes, you can redistribute that power, but it still has to go back through the grid. What's the next step? How do you connect them? Can we go and look at say smaller location energy storage? Like if you think of some cities have suburban data centers where you have like big server farms and stuff like that. You can kind of do the same thing with energy storage, really. Just big old battery banks here close to a major city, out of the way enough where it won't be an eyesore or a deterrent from anybody wanting to live in that city, but close enough to be able to easily build a very fast infrastructure of power distribution to get right to it. So I almost see it as that being a better solution is to kind of, instead of replacing the entire energy grid, just kind of upgrade it to the point where it can have more localized power storage available for peak demand. So look into that. I think that's going to be probably one of the themes we really look into coming into this year, going into the Trump administration, where actual solutions to problems are put into processes rather than just kind of putting the cart before the horse and trying to get everybody to switch to electric vehicles all of a sudden. By comparison, the technology wasn't quite there yet, but we have an opportunity to make that happen very soon.
I agree.
But yeah, it's insane how long it takes to build power plants and all that stuff. But you go into the localized stuff and the old adage of act globally, think locally. Just makes sense. That never goes away. That's never going to change.
It does not. Yeah.
And you get into oh, hang on, I know where to find that ticker, but you were going to say something about the other side of that.
So on the energy storage side with that, what something that's really keeping me, how should I say, abreast of this is we've seen auto manufacturers like Volkswagen Group, Toyota, all of those. I think they're going to be the ones that really lead this. I don't think that the energy companies, because they're more so into energy production. And yeah, an idea that was broached is actually with hydro on this. Hydro itself already utilizes a very, very, very large dam structure to do that. And a lot of that is empty space on there. It's just concrete.
Right.
What if there is a way that you could integrate the energy storage inside of the dam itself? And even for the locks that we see at the shipping regions, the canal, India, etc., utilizing those dead spaces with some form of an energy storage, be it a salt battery, be it whatever type of holding unit, but even more so figuring out possibly an aerogel similar. Granted, aerogel creates a barrier on there, it's not a storage mechanism, but everyone thinks of hard things to store energy. The fact is that you can use liquid things to store energy more, depending on the saline solution, etc. Don't believe me? Look at your brain. Your body is nothing but a big walking fluid battery.
Pretty much
on there. So how do we create a fluid battery? And then going back to the hydro, if you were to have a series of these maybe tubes, maybe vessels, something of that nature, then you'd be able to store the energy that it's creating. And then you just run the daggum thing at, 75, 80% efficiency, because you never really want to go, 100% on there. And, let it keep storing, and storing as they're doing the update for it. And you're preloading on those exact, just like a spring. You're preloading the spring on this. And, so that's something I've been keeping an eye on. Or what are the innovative liquid batteries that we're going to be looking at? And, that's on the non-auto side. On the auto side, it's been discussed many times that having not only a weight savings type of battery on there, but having something that's hot swappable. So
Right.
for the refills on the vehicles, and there have been experience with this. There have been small scale. Yes, I think it was Titan that did a small scale on this. But I hate to say it, I personally do not trust the average American with a high voltage system on this. So,
Yeah.
that's how you gotta get is you're gonna, at least for the initial part, you're gonna have to go to a special facility, or not special, but you're gonna have to go to somewhere designed for it. And you're gonna have Tony walk out there, and Tony's gonna, flip a switch, pull two wires, and go, all right, Rob, don't step outside. And then he'll swap the battery. Maybe they have an automated way of doing it. I'm being facetious there, but that's man, big drop here in the market. That's something that is completely feasible. Like, I know it sounds a bit odd, but it is out there. So what is the storage type, and then what is something that is a safe storage type?
Right. And I was remembering one of the tickers I was looking at was Bloom Energy. They do some energy storage solutions and such, but it's there's another one I'm not thinking of, and it'll come to me later. But yeah, same thing. I mean, you can store. I mean, you remember the old potato clocks? You have plug-in an anode and a cathode, two
Yeah.
dissimilar metals. I mean, you could turn a whole lake into a battery in that sense, the same way. It's a matter of, I think energy storage is going to be the key, one of the key themes going into this new age, basically. And I think Bloom Energy has a lot to offer in that respect too. So it's kind of to put that one out there. We just noticed that huge drop in the market all of a sudden. That was crazy. We're looking at Q just selling off right below the pivot here, and I'm probably sure TNA and everything's on the same path. But we're looking into pulling back here, just a reversion trade. I think liquidity will be found right around the 500, 505 region for QQQ if things get really swifty, so to speak. In the meantime, we're running a little bit over time today, but we can keep going for a minute as long as we're not upsetting Marziti too much. He was going to have a stream going at 12:30 here. Sorry, dude.
Oh yeah, Marziti's got his stuff coming up on there. Yeah, Jeremy, let's go ahead. What's our last one on there? Get everybody good to go.
Yeah, I think we're just looking at waiting, just to reiterate, waiting a couple of weeks into this month, and we'll see where all the real themes start to take effect and start to take momentum going. As far as the short-term stuff, yeah, there's going to be tons of volatility to scalp, and these moves are just awesome for scalping. Take advantage of the volatility while you can. If we end up in a bear market, just scalp that too. It's really that simple. I love a bear market myself. I can't wait to find a massive pullback in some of this, but we've been kind of exponentially running up for a long time now. Are we due for one? No, I think there's some reconciliation going on, but I don't know that there's going to be a massive pullback like we saw, back in the great bear market that we had. Well, that was awesome.
The great bear market. Yeah.
Oh, man. It's like you make really killer trades and you make really killer profits rapidly in a bear market. But we take the stairs up too, so we can trade both sides of that. But yeah, volatility is great for scalping. So I think just stay nimble and stay humble if you're a long-term investor in the first few weeks of January. And I think we're going to find some really, really good opportunities to get into from the investors, long-term buy and hold types or option sellers types like myself, what have you. We're going to find some great opportunities going into this year. I'm sure of it. And we're going to get them out to you as quick as we see them. So stay tuned. We'll see you guys next week. Have a wonderful weekend. Be safe. Try not to party as hard as you did on New Year's. That was a little out of hand for some of us. So take care, guys. Be safe.